All right. Good evening and welcome, traders. It is Wednesday, November 29th, 2023. Let's get into our trading and market profile for today and see what the market's doing. Let me go ahead and share screens and let's jump into it. All right. Take a look at the markets themselves. Down fractionally today. SPX down just barely. Down a few, $4.31 on the session. So pretty small day, pretty flat day for the most part. Down 0.07%. Let's take a look at SPY here and see what's going on in the market. Again, we gapped up on the day, so ran up a bit. I mean, right out of the gate, ran up. Had a pretty strong GDP report earlier today. We ran out of the gate. We ran strong right out of the gate, way up above, gapped up above the 3 ATR. Pretty good move. In fact, it was such a large gap up, in my opinion, compared to where we were and some of the levels that I immediately wrote a call credit spread, 0 DTE on SPX. At that point in time, turned out to be a pretty easy winner on that move as we sold off later on in the session. But gapped up, moved down, closed near the lows of the session, which again, not a terrible day by any stretch. So we tried to break out of this triangle to the upside. We may have done it, who knows? But really, you finished right back in there. So overall, really a nothing day. MACD continues just a slow burn down, and RSI continues to stay in overbought territory. I mean, this is a long time to be oversold now, since 11/14. So we have been oversold for 15 days, not sessions, but 15 days. So pretty good long time just being oversold or overbought here. And the market just going to continue to stay overbought. Again, as we all know, the markets can stay overbought or oversold longer than you can stay solvent. So they can stay overbought for a long time here, causing them potentially some pain for people, depending on your direction that you're doing. For us, there's 112 and neutral style traders with strangles and those types of trades. It's a beautiful thing. The more sideways we go, the better things are for us. All right, so there's SPY. No change. Weekly continues to move up a bit, and the daily continues to be overbought. At some point, something's got to give. Right now, we thought maybe the give was to the upside, and we start that early Santa rally. Even though this would be pretty early for that, I still think a pullback happens and then the rally happens very late in the year. But maybe it'll continue to just move sideways and higher. Pretty much the same story here on the NASDAQ. It is overbought as well, with MACD slowly bleeding down on the daily. But the weekly has been just moving up on MACD. RSI, although getting a little bit of a curve here, so that could mean that we might be starting to run out of juice a bit. We'll see what happens, but we are firing a squeeze on that for the most part. And then IWM today, again, a big gap up, finished towards the lows of the session, breaking out of that triangle to the upside, and then just finishing right back in line with where it's been for weeks now. So really nothing going on in the market. A lot of nothing here. And this is totally fine with us. We'll take a quick look. Any change really in the S&P stocks that are above their 50-day moving average? Really not much of anything. I mean, up slightly on the session, dropped up 1% to 76. Not extremely overdone yet. I think the 90 reading would put this into extremely bought areas, which would indicate more of a market downturn. But all indications are you should be pulling back here, and we're just hanging in on the market. Put call ratio dropped more on the session. That continues to drop. As long as that put call ratio continues to drop, the market really has no reason to start to sell off. I mean, people are buying, more and more of those calls, and as that ratio gets lower, meaning there's more calls to puts, that ratio is going to continue to drop, and as that ratio drops and people buy calls, the market's typically going to be bullish. All right, so VIX on the session maybe it moved in a micro here, 0.29, but VIX at 12.98, just doing nothing. VIX essentially is on life support at this point in time. However, MACD has been trying to slowly increase, but there's just not enough momentum there to move this to the upside. And you're stacked with the moving averages down, the 50s moving lower, the 21s moving up. It doesn't mean we can't spike and something can't happen, but right now there's just no catalyst out there. U.S. dollar did gain on the session, so good for the dollar to stop its decline if just for a day potentially. We are oversold on the daily, so the dollar is oversold daily. Totally makes sense that you'd find maybe some support in here on MACD trying to improve. So maybe we get, I don't know that a rally is what I would call it, but maybe we get a little bit of a bounce or a bear market rally on this, as the dollar's in definitely a bear trend. So maybe it's just a bear trend bounce or rally that happens on the dollar. If we take a look at the 10-year, the 10-year continues to drop, breaking some support levels here that we're looking at that date back quite a ways. So we'll see if this holds. I'm not going to take it off the screen because potentially this level could become a resistance level, but we're continuing to just see the 10-year just drop all the way down to 4.27% from 5%. So pretty hefty drop, on the dollar, and no signs of stopping right now on the weekly. If you look at that weekly, that MACD and RSI just heading lower, and RSI is just breaking the 50 now. It's not even, in my opinion, halfway done with this particular move, potentially. So we could have some decent downside to go, which is pretty bullish for bonds as a whole. So you would, knowing that this is the inverse TLT moving higher, so you continue to see TLT moving higher. Now we're back to areas that we were at that were really a support level, somewhere back in the September timeframe. So we've essentially erased, a couple months here, 2 months worth of down and up, and we're just at the same spot we were just 2 months ago on TLT. So for those that were starting to get in early, 2-3 months ago, you're probably back to flat, back to even with the trade. Maybe for those of you that got in really late here and hit the bottom somewhere in the late October bounce here, then I think you're doing pretty well. You've moved from 84 to about 92. So a decent little 8-point move up for you, which is about 10%. So maybe a 10% move overall off the lows. Not too bad, but took a month to get 10%. But still not a terrible trade. And there, again, could be a lot more upside to go. So we'll keep an eye on that as we look at all of these different downtrends that we start to tick off. So this downtrend here, pretty much taking that off, and we're stuck with the last long-term downtrend at around 94 here. We are still below the 200-day, which is still falling. However, today, pretty interesting that the 21-day exponential broke the 50. So that's a pretty good bullish sign for TLT. So I think bonds are good. I like where bonds are. I would be trading bonds again in here. I held off until we hit that bottom, started to reverse. And again, I still think there's a good ample opportunity to get into bonds because I don't think rates are done coming down. Okay? And the Fed's indicating that potentially, not the Fed itself, but a couple of governors that, maybe we've seen the bottom of inflation or the top of inflation, and it starts to fall down, which means we maybe have seen the last officially of rate hikes, and now we start to, instead of just holding, we may actually start to consider some rate hikes. I think maybe in tomorrow's episode, we'll take a look at Fed Watch tools and see where we think the Feds may be headed in the next session or two. All right, with the dollar running up, got a little bit of weakness in the Aussie dollar, a tiny bit of weakness in the British pound, a little bit of weakness in the Canadian dollar, and then a very little bit of weakness in the euro. Not surprising. They've had a very strong run here and moving up about 10% off of their lows. So again, 10% off the low seems to be where everything is. It's TLT, it's Forex here. And then if we look at bonds, we've already talked about TLT a bit. This thing broke out of this bullish trend that we have here. So let's get this thing off the screen so we don't clutter it up with too much junk. I like where we are on bonds. We've got 112 trades on bonds. We're up 96% in 9 days. Probably be taking that off, and we'll look to put another one on. I think this sets up really well for 112 trades, because if you get any kind of a pullback in bonds, we're going to pay off even more. Otherwise, we've had 100% return in just that short period of time, in just 9 days on this. I want to keep putting on these bond 112 trades, and it gives us a cushion all the way down to about 104. So if we drop below 110, we're in the trap all the way down to 104 on the current setup. A new one here, I think we would be able to put on. We'll share that with you. I think that's where I want to head next. And on oil today, a decent bounce higher on oil. So oil moving up a bit. We still can, we're still in the box here that we've been in since the beginning of the month. So we remain strongly entrenched in this box so far for almost the entire month. We'll see how long that this ride continues. But you're just consolidating in oil with big OPEC meeting tomorrow, I believe, in anticipation of that oil start to move up. So everybody that was panicking on oil, oh, my oil trades are all red, my strangles. Okay, now you got to worry about moving to the upside. Breaking out of this box to the upside, to me, is much more likely. This is fantastic for my naked puts. It's fantastic for our 112 trades. We're heavy oil. We love it here. And I love the sideways movement as this thing consolidates. I think oil's getting ready to make a run higher. We'll see what happens with OPEC tomorrow. Do they come out with a production cut, which would send oil higher, or do they keep things the same? I don't think they're going to increase production. But you know what? You could be surprised on any of that news. But we'll keep an eye on that. And if we look quickly, I think oil came out today. So crude oil inventories were up slightly. So the forecast was for a slight drop in crude oil inventories, and it came out with an increase in crude oil inventories today. So previously, we were at 8.7 million, only a 1.6 million today in crude oil inventories. However, it's an increase there. I still think there's a long way to go to add more to that. So that was bullish today. And then if we take a look at gold, kind of taking a break after this big, strong run up, at least for one day. You are now in an overbought situation on the RSI on the daily, with MACD continuing to head higher. You are above the 3 ATR, so it's overextended, overbought to the upside. But as we've seen in ES and SPY, we can stay overbought for weeks if need be. So I'm not throwing in a towel on gold here, but I like the fact that not a big follow-through move after yesterday's big gap up, and you do now have this particular gap that at some point here you're going to have to look to fill this particular gap. So we'll keep shifting it a bit, and maybe we'll fill that. Have to, but it's likely that we will pull back, fill that gap, and then I think rock and roll higher some more. I think gold, a good trade heading into next year. So I think metals next year as a whole will be in good shape. That's gold. That's also copper next year. Copper on a little bit of a dip day today. We're out of our copper trades, but I'm considering jumping back into copper. Look at this weekly. Look at the squeeze down here. Look how long we have been in a squeeze, and now potentially breaking to the upside on RSI. I think copper is getting ready to rock and roll as well here. So let's keep an eye on those. And then on live cattle, just a kind of a slight update today. Nothing big, but up 0.625. Which is not even 0.4%, so not even 0.5%. But after yesterday's pretty good gap or not gap, but move higher. Today, a little sideways to higher move, with RSI continuing to maybe move up and MACD continuing to improve on the daily. So daily chart bouncing off the 3 ATR, moving higher on the live cattle futures. And then if we look at the weekly, we're still heading lower, but this week could be putting in a pretty good doji candle. Maybe we're going to see a little bit of a bounce from here. We are right at the 50 EMA on the weekly, and we are below the Bollinger Band a bit here. And RSI on this week has just kind of held sideways. So if we can get a little bit of a turn on RSI and a little bit of a turn on MACD heading into next week or so, I think we could see this live cattle moving higher. So I like where we are there. Quick look at oil here. Volatility on oil just fractionally down. Really not a whole lot of anything on the day. So volatility kind of trending up. So there's definitely an uptrend on oil volatility, and oil still a decent amount of volatility. It's still elevated, and everybody wondering why, maybe puts aren't decaying, naked puts aren't decaying, or parts of the 112 aren't decaying enough. Well, you're still in a decent, increase in volatility. I mean, volatility has gone from 36 to roughly 42. It's a pretty good, 16, 17% increase in volatility over the last couple of weeks, and it's been just steadily increasing. So we're heading into OPEC tomorrow. You're in a squeeze on volatility. Not that I think volatility is something you can technically chart, but I think just by at least looking at it, you can see volatility is increasing in oil. I think this makes oil trades great right now. I love where we are. I'm heavy oil on overall. And then gold. We had a decent spike yesterday in volatility, a little bit of a pullback today on that as gold just inched up just a little bit today. However, like oil, gold volatility has been slowly creeping higher on the daily. So something to watch out is if we're going to increase on gold, then I want to get some new gold trades back on. All right, so we'll talk more about oil in a bit. Let's just look at the sectors for the day. Big winning sector back to its ways. The semiconductors just cranking higher, gapping up today, finishing at their lows of the session, but a pretty good up move here. But RSI and MACD have been rolling over and starting to take a break in here. We'll see where semis go. Another big mover on the day, up 2% on the session, are regional banks. So regional banks continue to look strong here. It's been a nice uptrend on regional banks, pretty steady to the upside on regional banks since those lows way back here when we broke this downtrend. So now you've got a series of higher high, higher low, higher high, higher low. So a nice uptrend right now on KRE on the daily chart. On the weekly charts, still in a bit of a overall downtrend, but really a sideways consolidation. And I think there's a lot here to pay some attention to. Maybe a little bit of a triangle or an ascending wedge to a small degree. Here it's not really ascending, but the upslope is a lot steeper than the downslope here. So to me, it's ascending. It's still a wedge. And we're moving higher. So it could break here. And I think you could see regional banks making a bit of a move. And then the only other sector over 1% up today was biotech, having another good day. The weakest sectors today is your materials or your consumer staples here. SB, your consumer staples. But just because it's down today, it's had a pretty nice move recently. So I think it's something to keep an eye on. This is definitely an ascending wedge. So we'll keep an eye on it. If we break below, then we're coming back down on XLP. XLU utilities. I think it's an interesting spot here on utilities. They've been on a rip-roaring uptrend for quite a while now. And down day today, but overall looking pretty good. So we're, again, another one of those I don't know the best way to maybe draw it through here, but if you really looked at it, when you had this triangle break to the upside here, so we'll see how this continues to look, but that was the break there that you really wanted. In fact, you can probably take this thing all the way back up here. And that was a pretty good downtrend line that we broke overall on the daily and on the weekly as well. So moving to the upside on utilities, even though a down day today, kind of liking where utilities are here. I think keep an eye on that. Energy down today, communications down today, oil down today, and then XLY down today as well. Your consumer discretionary as well. All right, so let's take a quick look at the major market moving stocks, which was Apple down 0.5% today. Just been on a tear, and a couple of days of sideways consolidation, all good. Microsoft hit a new all-time high yesterday, bounced back today. RSI starting to tip over, but sometimes it doesn't quite make it there. But you got RSI tipping over, MACD tipping over. Are we at a point where Microsoft starts to sell off a bit, and you've got RSI and MACD both on Apple heading lower? So these are telling you, okay, that we may be heading even lower on Apple coming up. Meta, a down day today. MACD, RSI, both heading lower. Google, MACD, and RSI heading lower here as well. Pretty good down day on Google, down 1.6%. Next to Meta at 2% down. They were the two biggest losers on the day of the Magnificent Seven. NVIDIA, just more sideways movement. This thing doesn't want to sell off at all, but look how long it has been in this sideways consolidation. Dating back to June, this thing has been in a 100-point range that it can't break out of to the upside or won't break to the downside. Here, we'll see if this pull back to the 21 and then a rock higher. Maybe. The weekly says we could be going higher. The daily says maybe not yet. And then Tesla today dropping a percent, moving higher today, hitting the upper part of the Bollinger Band, breaking the 2 ATR, and then finishing down below yesterday's close. So it did break out of that consolidation range. We'll take that off the table here. And really, you're just in a decent uptrend on Tesla. How long does this last? How far does this go? I think the best way to draw it is probably somewhere in here. And I think that gives you a good sense. And then look at this trend line coming down from above. That is almost where we broke but couldn't close above today. So this whole, even though we're in a little bit of a downtrend here, I think you've got nice sideways movement on this thing. It could break either way right now. If you're looking at the weekly, MACD is rising, RSI is rising, and you're now entering a squeeze. I think Tesla, I mentioned it a couple of days ago, I think Tesla is a good opportunity to get long. All right, so there's where we are on those Magnificent Seven. Let's take a look at our trading account for today on November 29th. Here's where we ended up. We ended up the day with a 55. Okay, so 55 on Delta. Only this 50 here was the lowest reading that I can remember. Okay, we are so dead neutral in this account. I'm loving it. You can go down, you can go up. You're not going to be affected strongly either way. I mean, obviously, when the markets are rising significantly, we're not participating in those as fully as we would be with more Delta. Okay, but as the market sells off or gets into a bit of a selling mode, we're also not going to get affected to the downside quite as much either. So we're fine just hanging here and chunking through realized gains, and we had more realized gains today. Theta dropped a little bit today to 12.18. We had trade come off, so that'll do that for you. So we had a winning trade come off. Theta, 0.37%, that 0.4% is what I'm targeting is a minimum, especially right now in a low vol environment. I'm thrilled with our Theta. Net lick rose today, 330,814. We are a fraction away from a new all-time high. We are 800 points away from a new all-time high. It's okay that we're not there yet because I'm more excited about our realized gains than I am about our net lick. Net lick will take care of itself. Okay, net lick is not making giant strides right now because we're delta neutral. Okay, if we were a lot more delta positive, we'd probably be doing a little bit better on the net lick, but that's not going to help my realized gains, and it doesn't help my trading style. Okay, my trading style is to be delta neutral. Okay, so we can weather the storms up and down, and we just like the markets to just oscillate their way around over time. All right, buying power did drop today, 204, 217, down to 61%, which again, 10% of that is BIL. We have $32,000 in margin, which is 10% of our overall total BP available. So if you actually subtracted the $32,000 from our BP, we'd really be around, we'd really be significantly lower. We're at 205. So really 205 minus the 32, 173, okay, puts us at about 52%. So yeah, again, 10% is what I told you guys that we're at. So 62 roughly here minus the 10% bill. We're at 52%. We're right at our perfect BP usage that I like to be at. I think we could go up a little bit from here. So I'll be looking at some trades tomorrow, and I've already got my eye on a 112 in bonds. ZBZN, something we'll be putting something on tomorrow. Now, we did have more daily realized gains today, $1,325 to the good. 2 trades today, taking our monthly realized now up to $24,000. And when we look at it, that is the largest month of the year by far. It's not over. We could take some losses. We could get some more gains. Who knows what can happen, but $24,000, 438. That's our realized gains for the month. 7.63% is our monthly return this month. That is our realized gains. Then we're also up $10,000 in net lick, which is 3.34%. Totally fine. Love when my account just continues to go up every single month, 3% or more. And that's just the net lick. We're generating more realized cash as well. So good stuff. Let's take a look at what we closed today. And there were 2 trades that came off today. The first one was a call spread. Talked about that early on, that we jumped into a call spread. In fact, when we jumped into that at 9:40. So within 10 minutes of the open, when we were above the 3 ATR and starting to tip over a bit, and RSI was at a hugely high level on the day, we decided to get out. That RSI on the 3-minute was off the charts high. So that was a chance to, get in to a call credit spread. We put that on today. I only did a half size because I was expecting potentially if we reversed a little bit and went even higher, I would double down on that and get into my full size that way. It never really happened. I was out of this trade before I had a chance to actually double it. So we'll take a small win. We closed at 15 cents. So overall, 63% winner on that trade in 29 minutes. So 29 minutes to make 63% and $125. So that was a good little trade just to add some cash. And then we also had a CL or an oil futures strangle close at 50% winner, automatic close. That thing closed about 4:42 this morning Eastern time. So before I even woke up, I get up normally between 5 and 6. I woke up and had $1,200 sitting in my account in realized gains while I slept, which is a beautiful thing to have happen. It's always good to wake up to an extra $1,200 in cash. That was our win. We ended up with a 17.2% return on margin, which was awesome. Premium capture, as I mentioned, we closed at 50%. So great return on margin for that. Those gains are already booked into our daily profits. So you can see now that the future strangles up to 37,000 for the year so far, doing pretty doggone well. 90% win rate is what we continue to be at. So those strategies are continuing to pay off. little zero DTE winner today, also helpful. That's a good sign. Other than that, I think that's all pretty good. If you like this video, click the like button. I could really use it. We can get more word out to people. Go ahead and click the like button below. Subscribe if you're not a subscriber. I don't know what you're waiting for. Get the videos. We posted another video earlier today, a session with myself and Gabriel Saints. So Gabe, fantastic trader, one of the best traders I've seen, really a whiz at the market profile and trading, scalping. He trades futures quite a bit. And then his trades on his butterfly trades, he's unbelievable. He's part of the Mr. Top Tick service with us. So he's in there as well, sharing his trades. So you got Igor's trades, you got my trades, you got Gabe's trades, and then you have all of our members posting a lot of their trades, and some of them are unbelievably great trades. Gary Crosby with his takes on things, really helpful for those with PM accounts, trying to get a sense of how to grow your account. So there's some really good guys in there. If you want to join us in the Discord, go ahead and click the link below. Also, the Black Friday special, we're running it through the end of the month, which is tomorrow. So tomorrow's the last day. We only have 200 spots available. We've sold 169 of those. So there's only 31 spots left. When those are gone, they're gone. We will not be letting in any more members on that at all. That will come off tomorrow. If you want to get in, get 40% off the first month, see what we're doing. I mean, today we gave you a zero DTE trade, and there was others that took some wins in the account as well. So we had others with 50% winners on zero DTE. Mine was a 63% winner. Okay, that alone paid the membership if you wanted to get in on those. Just understanding those strategies. The video today, outstanding. From Gabe. So if you haven't seen that live training session, I posted it live. We're going to give it out, even though it was for members only. I'm going to give that out to everybody. It's an hour and 16 minutes long of just golden stuff from Gabe. So see what he's doing out there. And hey, guys, have a great evening. We'll see you tomorrow. All right. Take care, everybody. Stay safe. Okay? And we'll see you down the road. Bye-bye.